All right, get ready to dive deep today because we're tackling how to recession-proof your investments.
Ooh, that's a good one.
You guys send in a ton of research on this.
Yeah.
Defensive stocks, value plays, fixed income, even alternatives like gold.
Uh-huh.
We've got it all, from stuff like recession-proof investing strategies and more.
Nice.
So let's dig into it all, see what really stands out.
Yeah, and try to find those nuggets that can help you ride out any economic storm, right?
Exactly.
It's really interesting how some companies actually thrive during recessions.
Yeah.
It's like they have this secret playbook, for tough times.
That's what I'm curious about. Like, what's their secret? What makes them different?
Right.
The research mentioned defensive stocks as a starting point.
Yeah.
What's that all about?
Well, think of it like building a fortress around your portfolio.
Okay.
Defensive sectors, those are the ones that provide the essential goods and services people rely on no matter what the economy is doing.
Makes sense.
Like, people always need these things, right?
Mm-hmm.
These companies usually have some built-in advantages like pricing power,
Yeah.
consistent demand that really helps them weather the storm.
So even if folks are cutting back, they're still buying these essentials.
Exactly.
Got it.
Makes sense, right?
Yeah, totally.
So, what kind of companies are we talking about specifically?
Yeah, give us some examples.
Well, the research highlighted consumer staples as, a prime example.
Okay.
Think Procter & Gamble, P&G.
Oh, yeah, sure.
They've built this amazing portfolio of brands, Tide, Crest, Pampers.
All right, everyone knows those.
Stuff people just can't live without.
But what makes them so resilient during a recession?
Yeah.
Is it just name recognition?
It's more than that.
All right.
They've really mastered brand building. They put a lot into research and development, always innovating to stay ahead of the curve.
Right.
And they get consumer psychology, tapping into those emotional connections that go beyond just, basic needs.
Interesting.
This lets them charge a premium even when people are bargain hunting.
So even when money is tight, people are willing to shell out a bit more for those trusted brands.
Yeah.
Makes sense. It's like a comfort thing.
Exactly. And that loyalty leads to consistent revenue, which is key during uncertain times.
Right, yeah.
Now, another company that's interesting in this space is Walmart.
Okay.
Built their whole empire on low prices, which, becomes even more appealing during a recession.
Absolutely. When everyone's tightening their belts, Walmart's everyday low prices really hits home.
Right.
But is that enough to make them recession-proof? A lot of retailers struggle during downturns.
Yeah, but Walmart's different.
Okay.
They've invested heavily in supply chain optimization and operational efficiency. They can keep costs incredibly low, giving them an edge, especially when inflation is rising.
So it's not just about offering those low prices. It's about being able to keep them low, even when everyone else is getting squeezed.
Right.
That's impressive.
Yeah,
Any other sectors that offer this kind of resilience?
absolutely.
Okay.
Healthcare.
Yeah.
It tends to hold up well during recessions.
Right, because people might put off that vacation or a new car, but
Yeah.
they're not going to delay essential medical care.
Exactly. It's not like you can just skip your medication because the economy is shaky.
Good point.
So, which companies stand out in this sector?
Yeah, I'm curious.
The research pointed to Johnson & Johnson
Right.
as a classic example.
J&J.
They have this incredibly diverse portfolio spanning pharmaceuticals, medical devices, consumer health products.
Wow, so it's like they have a finger in every pie of the healthcare world.
Yeah, pretty much.
Does that diversification really make a difference in a recession?
It absolutely does.
Okay.
It provides a buffer if one area weakens.
I see.
Say, pharmaceutical sales slow down.
Right.
Their medical devices or consumer health divisions can pick up the slack.
So it was like a risk mitigation strategy.
Exactly. It adds stability to their business overall.
That makes a lot of sense, spreading the risk. Across different parts of the healthcare market? Any other companies worth noting in this sector?
Well, United Health Group was mentioned.
Oh, right, the insurance giant.
They're huge in the health insurance space.
Yeah,
And there's always a need for insurance, even during tough times.
I guess so. But wouldn't a recession potentially impact health insurance coverage? People lose jobs, and often health insurance is tied to employment.
Yeah, you're right. That's a valid concern.
Yeah.
Recessions can definitely disrupt health insurance, which could impact a company like United Health Group.
Right.
It's something investors need to think about carefully.
For sure.
However, the sheer size and reach of United Health Group, along with their diverse business lines, might offer some level of insulation.
So even within a seemingly defensive sector,
Yeah.
there are nuances and potential vulnerabilities to consider.
Precisely. That's why it's crucial to dig deeper.
Okay.
Go beyond those broad sector classifications.
Yeah.
Really look at each company's business model and how they might be affected by a recession.
So we've talked about consumer staples and healthcare.
Uh-huh.
What other sectors are good for building a recession-resistant portfolio?
Well, think about things you absolutely can't live without, even when times are tough.
Besides food and medicine.
Yeah.
Let me think.
What comes to mind?
Okay. Electricity, gas, water.
Yes.
The basic utilities we need
Exactly.
to keep our lives running.
Utilities tend to do pretty well during recessions.
Yeah, that makes sense because demand for those services is super stable.
Right?
Like people need them no matter what their financial situation is.
You can't exactly choose to go without electricity just because you're trying to cut back on spending.
Nope.
So which companies are the standouts in utilities?
Yeah. Who should we be looking at?
The research highlighted NextEra Energy.
Okay.
They're a leader in renewable energy,
Oh, interesting.
which puts them in a good position for the long term as the world shifts to cleaner energy.
So it's a defensive play with a growth angle. I like that.
Yeah, pretty smart.
Are there any other utilities worth considering?
Yeah, Duke Energy caught my eye.
Okay.
They're a regulated utility, meaning their pricing is determined by government agencies.
So they have built-in price stability
Exactly.
because their rates aren't subject to the same market ups and downs as other companies.
Right. This regulatory framework makes their revenue very predictable,
That's good.
making them a good choice for those seeking stability, especially during turbulent times.
This is all great information.
Yeah.
So we've explored those defensive sectors like consumer staples, healthcare, and utilities, and we found some specific companies that seem pretty well equipped to handle a recession.
Uh-huh.
What other strategies can investors explore?
Well, we talked about playing defense, right? But what about those who want to capitalize on a downturn?
Ooh, yeah?
Maybe even find those hidden gems that shine brightest when everything else is, losing its luster.
Okay, now you're talking. Turning a crisis into an opportunity.
Exactly.
That's the spirit.
That's the entrepreneurial spirit.
The research mentions something called value investing.
Yeah.
Is that what you're getting at?
Exactly. Value investing is all about finding those companies that the market has undervalued.
Mm-hmm.
These are companies with strong fundamentals,
Wow.
solid earnings, good management, healthy balance sheet.
Wow.
But for some reason, their stock price is trading below what it should be.
So it's like finding a diamond in the rough, right?
Yeah.
A company with potential that's been overlooked or unfairly punished by the market.
Yeah, that's a great way to put it.
Okay.
Now, value investing can be a bit tricky, especially during a recession.
Right.
You got to be able to cut through the noise,
Yeah.
separate those temporary market jitters from genuine fundamental weakness.
It sounds like it takes a lot of research,
It does.
a keen eye for spotting those hidden gems.
You got to know what you're looking for.
Where do you even begin? The research mentioned high dividend yield stocks as a potential starting point.
Yeah, that's a good place to start.
Okay.
High dividend yield stocks can give you a steady income stream, which can be really attractive when things are uncertain.
Right, like a little cushion if
Yeah.
the market takes a dip.
Exactly. So even if the stock price goes up and down, those dividend payments can help offset some of those losses.
But how do you know if a high dividend yield is sustainable?
That's the key question.
Yeah.
A high dividend doesn't always mean it's a good investment.
Right.
Sometimes it can be a sign of trouble.
Oh, okay.
A company might be paying out more in dividends than it can really afford,
I see.
maybe to attract investors despite underlying problems.
So you got to look beyond just the dividend yield.
Right.
Really analyze the company's financials, right?
Absolutely. You want to see consistent earnings,
Mm-hmm.
a healthy balance sheet,
Yeah.
a strong track record of those dividend payments.
Got it. So are there any examples of companies that fit the bill?
Yeah. The research highlighted a couple.
Oh, good.
AT&T was one.
AT&T, the telecom giant.
Yeah.
I can see how their services would be considered essential.
Mm-hmm.
Phones, internet, even during a recession.
Right.
But are they really a good value play?
Well, they've had some challenges lately.
Yeah.
Cord cutting, more competition in wireless,
Right.
but they still have a huge customer base and a reliable revenue stream.
Okay.
Plus, their dividend yield is pretty tempting.
So it's a trade-off, huh?
Yes.
Weighing their challenges against their potential for growth and income.
You got it.
Any other high dividend stocks that caught your eye?
ExxonMobil was another one.
ExxonMobil, really.
Yeah.
Oil. With all the talk about renewable energy,
Yeah.
climate change, isn't oil kind of a risky investment?
It's definitely something to think about.
Yeah,
But ExxonMobil is huge in the industry.
that's true.
Massive integrated business model.
Okay.
They explore, produce, refine, market petroleum products, the whole thing.
Oh.
And they have a rock-solid financial position.
So even with those long-term concerns about oil, their current financial strength and that dividend payout could make them attractive for some investors.
It's all about weighing the risks and rewards.
Right.
And figuring out your own goals and risk tolerance.
For sure.
Now, let's shift gears a bit.
Go.
Talk about another strategy for navigating a recession.
All right.
Fixed income.
Fixed income. Okay. I've heard of bonds.
Yeah.
But to be honest, they've always seemed kind of,
Boring.
yeah, a little bit.
I get it. They don't have the same excitement as stocks.
Right.
But they're crucial in a balanced portfolio.
All right.
Especially during a recession.
Mhm.
Think of fixed income as that anchor
Okay.
that keeps your portfolio steady when things get rough.
So less roller coaster, more like a gentle sailboat ride. I like that analogy.
But why are bonds particularly appealing during a recession?
Yeah, why is that?
It comes down to stability and predictability. Fixed income investments, like bonds, they provide those regular interest payments,
Uh-huh.
and then you get your principal back at maturity.
Right.
It's like a guaranteed income stream,
Okay.
which can be really comforting when the market's all over the place.
Yeah, so while stock prices are dropping,
Yeah,
your bond investments are just chugging along,
right.
paying out that steady interest income.
Exactly.
That does sound pretty good when everything else is uncertain.
It's all about peace of mind.
Right.
Now, when it comes to safety and stability,
Yeah.
you can't beat U.S. Treasury bonds.
Okay, treasuries.
These are backed by the full faith and credit of the U.S. government.
Right.
Makes them incredibly secure.
So unless the whole U.S. government collapses,
Right.
my treasury bond investments are pretty much guaranteed.
That's the idea.
That is reassuring.
The research specifically mentioned the 10-year Treasury note
Okay.
as a solid option,
Right.
offers a fixed interest rate,
Uh-huh.
and it could even go up in value if interest rates decline.
Which often happens during a recession.
Exactly.
So it's like a double win, steady interest and potential growth
You got it.
if interest rates drop.
It's a great way to add stability
Makes sense.
and potentially benefit from those falling rates.
Now, what about TIPS?
TPS, yeah?
Those were mentioned in the research.
Those are Treasury inflation-protected securities.
Okay, remind me what those are all about.
They're designed to protect you from inflation,
Okay.
which can be a real worry during a recession.
Right.
Inflation erodes the purchasing power of your money,
Yeah.
but TPS help counter that.
So if inflation is going up
Uh-huh.
and everything's getting more expensive,
Yeah.
TPS can help preserve the value of my investment.
Exactly. Their principal adjusts with inflation.
Okay.
So if inflation rises, the value of your TPS goes up too.
So it's like a built-in safety net.
Exactly.
Yeah.
To protect your purchasing power.
I like that.
So we've got treasuries for safety,
Uh-huh.
TPS for inflation protection.
What if I'm looking for something with a little more potential for growth?
If you're willing to take on a bit more risk,
Okay.
you might consider investment-grade corporate bonds.
Corporate bonds. Okay.
These are bonds issued by well-established companies
Right.
with strong credit ratings.
So it's like lending money to a company instead of the government.
Yeah, that's a good way to think about it.
But how do you know if it's a good risk?
It all comes down to the company's financial health,
Right.
their ability to repay their debts.
Makes sense.
Investment-grade bonds are issued by companies with solid financials,
Okay.
low risk of default.
Hmm.
The rating agencies like Standard & Poor's and Moody's, they assess all this
Uh-huh.
and assign ratings to help investors gauge the risk.
So I should stick with bonds from companies with a good track record and a solid financial outlook.
Exactly.
But wouldn't corporate bonds be riskier than treasuries?
They do carry more risk, yes,
Okay.
but that risk often comes with higher potential returns.
Nice.
Corporate bonds usually offer higher interest rates than treasuries,
Okay.
which can be attractive if you're looking for more yield.
So it's a trade-off.
Always is.
Higher potential return for accepting more risk.
You got to find that balance that aligns with your risk tolerance and goals.
Absolutely.
Fixed income can be a powerful tool
Mm.
for adding stability, predictability, even potential growth,
Okay.
especially during a recession.
It's all about finding the right mix.
That's it.
This is all incredibly helpful.
Good.
So we've explored defensive stocks, value plays with those high dividend companies,
Uh-huh.
and the world of fixed income.
Right.
What other options are there?
Yeah.
What about those alternative investments the research mentioned?
Oh, yeah.
Those sound intriguing. Alternative investment, like we're going off the beaten path.
Yeah.
Looking for hidden treasure.
That's a good way to put it.
I'm ready for an adventure. What kind of uncharted territory are we talking about here?
Well, think of alternative investments as those assets that fall outside the usual stocks and bonds.
Okay.
They give you another way to diversify your portfolio and maybe even hedge against specific economic risks.
Okay, I'm picturing a treasure map here with a big X marking the spot for those hidden investment gems.
Right.
What kind of treasures are we searching for?
One that often comes up is real estate.
Real estate,
If
okay.
it's a tangible asset,
Yeah,
people always need it,
that's true.
no matter what the economy is doing.
Right, people need a place to live, whether they're buying or renting.
Exactly.
But how do you invest in real estate in a way that can withstand a recession?
There are a few ways.
Okay.
You could go direct and invest in rental properties.
Become a landlord.
Yeah, become a landlord.
I like that steady rent.
Exactly. And during recessions, demand for rentals often goes up.
Oh, interesting.
People might delay buying a house
Right.
or downsize because of finances.
So you could actually turn a downturn into an opportunity? More renters, more potential income?
Yeah, but being a landlord comes with its own set of challenges.
Oh, yeah, for sure.
Managing properties, tenants, repairs, it's a lot of work.
It's not for everyone.
Definitely not.
But if you don't want to be hands-on,
Yeah.
there are REITs.
Your REITs, exactly.
Real estate investment trusts.
Those were mentioned in the research.
They were. Remind me how those work.
REITs are companies that own and manage income-producing real estate.
Okay.
Like apartment buildings, shopping malls, office complexes.
Like,
They let you invest in a bunch of different real estate assets without having to deal with owning them directly.
so you get exposure to the market
Yeah.
without having to fix leaky faucets.
Exactly. No chasing down rent checks.
That does sound appealing.
Right. But how do REITs actually do during a recession?
Yeah, that's the question.
Well, it depends on what kind of properties they hold.
Okay.
Residential REITs, the ones with apartments, they might do well because of that increased rental demand. But commercial REITs, those focused on offices or retail spaces, they might struggle if businesses downsize or close.
So you have to really look at what a REIT owns
You do.
and consider how those properties might be affected by an economic downturn.
It's all about understanding the assets and their vulnerabilities.
For sure. Okay, so now let's talk about precious metals.
Precious metal.
Gold, silver, platinum.
The shiny stuff.
They always seem to have that allure, especially when things are uncertain.
There's something about them.
What makes them so appealing during a recession?
Well, historically, precious metals, especially gold,
Yeah.
they've been seen as safe havens
Okay.
during times of economic and political turmoil.
I could see that.
They're physical assets.
Right.
They tend to hold their value when currencies are losing purchasing power.
So if inflation is high and the dollar is dropping,
Yeah.
gold can be a hedge, protecting your wealth.
That's the idea. Gold is seen as a store of value, a way to preserve purchasing power when other assets are going down.
I get it. It's like a financial anchor in a storm.
Exactly.
Something tangible with real value that's not tied to the ups and downs of the stock market or currencies.
Right.
What about other precious metals?
Well, silver often comes up too.
Okay.
It tends to be more volatile than gold, but it can also hedge against inflation and downturns.
So silver's like gold's more adventurous cousin.
You could say that.
More risk, but maybe more reward.
Possibly.
What else is interesting about silver?
It also has industrial uses,
Oh, right.
which can help keep demand up even when the economy slows down.
So it's not just a shiny object.
Yep. Yeah.
It has real-world uses.
It does.
That's cool. So we've covered a lot.
have.
Defensive stocks, value plays, fixed income, and now alternative investments.
Like real estate and precious metals.
It's like building a whole toolkit for navigating any economic weather.
And that's the key. Diversification.
Diversification, right?
Yeah. There's no one magic investment that's guaranteed to work during a recession.
No silver bullet.
You got to spread your risk,
Across different asset classes
each with its own characteristics.
and potential for growth.
Or preservation of capital.
So it's like building a well-rounded team.
A team, yeah.
You wouldn't want all quarterbacks or all defenders.
Right.
You need a mix of players with different skills to succeed.
Exactly. And a good investor is like a good coach.
Uh-huh.
They evaluate each investment just like a coach assesses each player.
I like that analogy.
It's about understanding strengths and weaknesses.
This has been an amazing deep dive.
Really?
I feel like I've learned so much about how to think about investing, especially when things are uncertain.
That's what we aim for.
Any final words of wisdom for our listeners?
Remember, investing is a journey,
Okay.
not a destination. There will be ups and downs.
That's for sure.
But stay focused on your long-term goals.
Right.
Don't get spooked by those short-term market swings.
Good advice.
Stay informed. Do your research.
Yeah.
Don't be afraid to ask questions.
Okay.
And most importantly, enjoy the ride.
Enjoy the ride. I like that.
Investing can be tough, but it can also be incredibly rewarding.
Words to live by. Thanks for joining us on this deep dive, everyone.
Yeah, thanks for listening.
We hope you feel equipped to navigate any economic waters.
With confidence.
Happy investing, everyone.
Happy investing.